All right, welcome back everyone to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everyone? How you guys doing?
Man, oh man, the stock market ended today with a crazy move, man. Like Wale and I were just talking about how I don't know, ain't nothing stopping this market. Not the war, not the pandemic. I don't know what's gonna stop this market from moving higher. But man, if you guys go look at some of the stocks today, I think honestly, a lot of the concentration on a certain sectors, right? So it's like we see the anything that has to do with technology, basically, a lot of those stocks moved, right? We have some laggards here and there, but a lot of those stocks move. We see also the energy stock on the move. We'll look at Aglo, we'll look at some of those nuclear names, they're all gonna move also. So I mean, Wale, man, like I think this will be a good time to kind of like talk about um what are like I guess looking at fundamentals right now, right? Like I'm talking just legit fundamentals, not even talking about like price action, not even talking about technical and stuff. Like, what are some of the drivers for why we're seeing like the Dow is surging like 600 points and S&P is like what 7,300, like way above, like up there. You know what I mean? Like, what could be the reason for this? Because we have a war going on. This and to be frank with you guys, the economy is not doing that well. Everything's freaking expensive. If you think about inflation is probably up there right now. So why is the stock market just moving like this?
So, from a from a fundamental standpoint, one thing that we always say on this show is what is the long-term driver of stocks? It's
Yeah.
earnings. And the earnings have been good. They've been good.
Mm-hmm.
I think when you look at the numbers of what was expected from, let's just start with the hyperscalers for the most part, with the exception of maybe like Meta, all of them pretty much posted really good numbers. Microsoft had solid numbers, Amazon had solid numbers, Google had really good numbers, and they're probably, again, they're ahead of the game when it comes to showing profitability for AI. So as those people held their CapEx spending numbers, they didn't decrease them. You look at who are going to be the beneficiaries in that supply chain. And if you look at who the beneficiaries are, I mean, we saw what AMD did today. We saw what Supermicro did today.
Yeah.
Couple weeks ago, we had Taiwan Semi and ASML continue to say that there was demand for their products. SanDisk, same thing. Micron, same thing. So when you look at all of the names that are connected in this whole AI chain, for the most part, a lot of the big names haven't really faltered or said anything to derail the train. And I think right now what is happening is fund managers were either too gun shy, right? Because they didn't want to deploy any cash, and now they're probably just playing catch up. Like, I think, and here's my theory too, as well. I wouldn't be surprised if some fund managers are seeing Warren Buffett sitting on all these cash, and that's making them a little bit scared.
Mm,
Like they're saying, okay, if Buffett ain't really deploying no cash, what makes me think that I know more than him, or I should be deploying cash at this point?
yeah.
I think that that might have been the narrative for so long. Because if you look at this movement, I want to say Berkshire Hathaway hasn't participated in any
They
of
haven't.
this at all
Nope. Nope.
because their cash pile continues to grow and they keep selling stocks.
Mm-hmm.
And if I'm not, I mean, I hate to say this, but I think they've been wrong over the last couple months. Like they have
Yeah.
really missed out on. Now, I understand that they have their own investment philosophy of what they invest in and what they don't invest in. And I'm pretty sure that they just probably not going to chase any of these, you know, these names based on their current PE ratios because some of them
Right.
have just gone. I mean, SanDisk. I mean, I don't know what the explanation is for that. Like
I don't know, man.
I don't understand. The only thing I can say is it probably just has to do with supply and demand. And
Mm,
because the demand is so high and supply is so short, there's only a few names that kind of make that high capacity memory type of infrastructure,
right.
and they're just kind of like right place, right time.
Yep. Yep. The other
So
thing,
that,
I think like some of those stocks also might be heavily, heavily shorted too. You got to think about it.
yes, yeah,
Because
probably.
Sandisk, if you look at Sandisk from like 2, 3 years ago, they wasn't really doing that good. So again, some of those stocks might be heavily short. Also, you got to look at that and from that perspective.
Another thing is funny is the Micron CEO is a former co-founder of SanDisk.
Isn't that crazy?
And then WDC bought SanDisk and then later spun off SanDisk, and both of those names have just gone
Crazy.
freaking parabolic. I mean, if you are sitting in cash or if you're not in the market, I mean, this is the only other run I can think of that's been like this is COVID in the most recent years. I just look at where the market has gone from the April 1st or March 31st lows and now. I mean, I am I just I have no words.
Yeah.
I have no words. The only thing I will say is that the RSP hit a new high today, but that 205.50 area has held as resistance on one, two, three, 4 straight months on the RSP. So
Hmm.
so what that tells you is this is a very, 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 very concentrated rally. Very concentrated.
Yep. Yep.
Um, Now I saw some names that were up today. Like I saw, what else was up today? Disney was up today. I saw Royal Caribbean was up today. Like, CCL was up today.
Uber
G
was up. Uber was up big too.
Uber was up today. So I saw some other sectors starting to participate. So today was a little bit more broader, but for the most part, this is like 90% tech doing all the heavy lifting.
Yeah, yeah. And nothing but tech, man. That's all I see right now. And okay, while we're talking about tech, like what are the drivers? I know we talked about AI and all this stuff. So what are the drivers that we've been hearing from why the AI, like the technology stuff is kind of soaring?
So it's the demand for compute. That's what it is. And as you have more demand for compute, you're trying to create these models that answer questions faster, deliver more detailed analysis, can think, and reason at speeds that continue to get better and better and better and better. And they keep trying to build on that. So the demand for all of the infrastructure needed for that, I mean, it's just crazy. And I'm hearing that NVIDIA is partnering with a housing company to put data centers on people's houses.
Yo,
Like, that's crazy.
you gonna start getting paid to host to be a data center for your house.
Correct. So,
I mean, that's not a bad idea if you want to make some money.
so I think they're doing like a pilot test. I don't know where they're doing the pilot test, but I know that they're running one right now. But I mean, all this tells me is that the bottleneck is going to be with power.
Hmm.
The demand for power is going to skyrocket.
Right.
And the question, I guess, at that point is, does the consumer get hurt for having to pay higher energy prices, or do they find a solution to keep that from happening? We talked about some states like Maine who are trying to, like, put a stop to having consumers pay higher prices. I think Florida was also talking about that as well. Like, okay, you want to build a data center in our state, you must be able to pay for your own power. So that's a story that still needs to develop. Um, but man, and the money that's going into like farming land and data center land and infrastructure, like those numbers are,
It's
I mean,
crazy.
Blackstone, created a new fund. I don't know. I got sent an invitation to invest in this new fund from Blackstone. What's the ticker symbol? I think it IPOs on the 13th of May. What's the ticker symbol for this? It is called the Blackstone Digital Infrastructure Trust, BXDC. Supposed to start trading on May 13th. So this is crazy, man. Like I'm just looking at the market right now and I'm just like, this is probably what people were feeling during the Industrial Revolution.
Yeah, yeah. I don't doubt it, man. I think that's exactly how, because it's like the crazy thing, you see all this move and you like sitting there trying to figure out how to participate in, right? Because like we see sometimes people see the stock market is moving higher and higher and higher and higher, but you don't know like a lot of those people who actually benefit from this stock market has been participating in the stock market already. So if you're a new guy, you like seeing the stock market sitting all time high, you like all of a sudden you want to jump in, if without doing your due diligence, you might actually be in a bad position to lose your money, right? So it's like
Correct.
we are in this state of euphoria. Like everything is just moving high. This is for me, is like this is a time like, yes, go ahead and try to invest, but also be very, very, very cautious, right?
Correct.
Because yeah, we definitely at that time right now where um yeah, you see all over the news, stock market hitting all time high and all this stuff. For me, it's like you always gotta have the opposite thoughts of when the stock market is hitting all time low, it's crashing and all this stuff. For me, it's like you always gotta keep switching your mind, actually. You know what I mean? So when the stock market is high like this, be cautiously, be optimistic, but be very cautious. Stock
Yeah.
market is dropping down. Don't be scared. Ease your way into it. You know what I
Yeah.
mean?
That's exactly the playbook.
Mhm.
Like I will tell people right now, like, okay, this is to me, I don't think you should ever get to a point where you're like, I'm gonna just stop buying stocks. I think I've said this before. Is that okay?
Yeah.
The pace at which you're buying should be more aggressive when things are nasty and bad, like what we saw during the war, right? Now, you also have to have the mindset that while you're buying those stocks, you're not expecting instant gratification. Because I'll be honest, let's just assume that the war continued to escalate. We're in a completely different situation right now.
Yeah.
Let's just assume that there is no deal. Iran's bombing the US, and they're just going back and forth. We're in a completely different situation, which
Yep.
is why while you're investing during times of distress, don't expect to like hit the bottom, right? Don't expect to be like, oh, I'm gonna try to time the bottom and get in right when everything is like at its worst. I mean, I'll say this again. If you would have told me that we would be at this level this quickly from where we were at the end of March,
Hmm.
I wouldn't believe you. Like I would say we were eventually going to recover at some point,
Not this quick
but
though.
this quick, heck no. No way. I would not have believed that.
Yeah.
So
Yeah.
that's just one of those things that, you never know how quickly things can recover. You also don't know how quickly things can drop either.
Right. Right.
So, but man, just crazy. Crazy. I mean, I am I don't even know what to say, to be honest with you. I just don't, I don't know what to say. And I
it's
and I
it's it's crazy.
yeah, like
Yeah.
I can't I'm not saying that it's these gains are not justified. I think the speed is what has gotten me. Like if we were in like, let's just say November, September, like towards the end of the year, and this is where we're at all-time highs, I'd be
Hmm.
like, that makes a little bit more sense, right?
Hmm.
So, but I still think that this is the tale of two stories, though. Tale of two stories. I think B2B is doing really, 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 really well.
Right.
I don't know if B2C and consumer spending is what I think there's something going on there that we just don't know all the details about.
Yeah. Yeah. Yeah.
Yeah.
We're not exposed to that just yet. I feel like um yeah, I just feel like we're not exposed to that just yet because it's like you say, stock market is like right now it's not moving based on consumers.
No.
This is a pure big boy money coming to the stock market. This is not like your regular retail consumers, traders or investors coming to the market. So
No.
yeah, so we shall see, man. I think there's still, we'll say how this week closed. We're still more. We still got what 2, 3 more weeks left in May. We'll see how the sector rotation, if anything happens like that, we shall see, man. But yeah,
I just want to give go take a look at a chart. Go look, and this is how you know things are crazy. Go look at the monthly chart of Caterpillar.
Let's look at
Just
cat.
go look at that chart. Look at the monthly.
See what cat is doing.
Does that look like an industrial stock?
Oh my God. Look at the last couple of months.
Look at that chart. Does
That
that
is
look like an industrial
crazy.
stock to you?
This looks like a startup tech stock. I don't know, growth stock.
This is Caterpillar. I mean that chart is just crazy.
Costco's not
So
even moving like that. That's crazy.
yeah, see, and the reason why to me why Costco's not moving is who does Costco cater to? They cater to consumers.
Consumers, yeah.
Yeah. The only one that I know that has been moving quietly is Target.
That's what I was gonna say. If you guys go look at Target,
Target has quietly been making um
yep,
a steady comeback.
it's been green since December.
Yeah.
That's
So
crazy.
yeah. And I've been looking at so many different names that we've discussed on this show, and I'm just kind of like, man, I mean, look at APLD. APLD just hit an all-time high of 44.25 today.
Crazy. Crazy. And we were talking about it when it was still like under $20, I think.
Yeah, it's like 17.
Hmm.
So my thing is, again, I hope that the market hasn't gone too far too quickly because usually when that happens, you get a repricing of things, right? But my thing is, if there is a pullback, the stocks that have good quality earnings, you'll be able to get those names at a cheaper
Cheap
price.
price, yes.
So you should, I think to me, what I always like to do when you see days like this and stuff like this, you should be making a list, man. Making a list of okay, these are names that okay, if there is a pullback, if things get ugly, I would like to participate in the rebound or the upside in the future.
Yep.
Because for some of these names, right, we might have something that comes up that doesn't necessarily affect their business, right? Maybe interest rates go up. I don't know. Something happens, the war escalates. Some of these companies, right, their business is not going to be affected. It's
Right.
just how the people feel about the market in general. And you can't diversify out of that risk. So if there is a pullback and nothing materially changes with the businesses of these companies, I mean, I would love to get into some of these names at a cheaper price. So yeah, we'll just man, this is every time I look at some of these charts, I just laugh.
I mean, this is like I say, we're in a state of euphoria. But the other thing to the stock market is you never know how long the euphoria will last, right?
Correct.
So just when you think I was gonna pull back, it might just keep going higher.
Hmm.
So you almost like have to, in the short term, look at what the trajectory of the stock is, but in the long term, also keep an eye that it might come back down. So
Hmm.
again, just you have to have that outlook. You know what I mean? You can't just be all in. Okay, we all in bullish. You can't do that. Like
No, no, that's
you gotta
that's
have
not.
that dual. Yeah, you gotta have
Yeah,
that duality. Yeah,
yeah, that's not how it works. You have to have reasonable expectations, especially again when you get to these type of highs. Now, I will say this: there are the one sector that has not been participating in making all-time highs is software. Software hasn't really been participating that much. Biotech names have not really been participating that much. Uh, Financials have been doing okay, but also remember too that at some point, fund managers are going to sell their winners and start buying losers.
yep,
There will be a sector rotation at
yep.
some point in the future. And someone brought to my attention like a name like Pfizer, good company, you know, pretty steady business,
Mm-hmm.
but they are not a really hot stock right now,
Right.
right? So you might, if you're a buyer, I would say this: if you want to be an aggressive buyer and you have a long-term time horizon, again, you're investing three,
Long
four,
term.
5, 6 years down the road. look at areas of the market that haven't really participated in this
Yep.
rally,
Yep.
right? Because at some point they will start to
We'll
move,
start participating. Yep.
but you just need to find good businesses because when fund managers sell their winners and take profits from their winners, they're going to be looking to invest in good businesses in the future.
Yep. Yep.
So,
And you're absolutely right. Like if you look at the healthcare sector, they haven't really been participating a lot, right?
no.
So go pull up that chart and see which ones are actually, will make sense for some of those fund managers to invest in. Like Pfizer, I was looking at Moderna the other day. Moderna actually was doing a little better, but then I think it kind of pulled back a little bit. So that's another one too you want to keep an eye on and all that stuff. But overall, man, the sector that's really, really, really moving the stock market right now so far has been mostly concentrated in technology. Some sectors starting to participate a little bit, but overall, broadly, technology has been leading the way,
Yeah.
which is interesting. And I mean, it kind of makes sense because we're this whole age of AI and all this stuff. Now, energy maybe starting to participate also a little bit. I mean, we talked a little bit of data center and all that stuff. That might be also another sector to keep an eye on. Still, my story's still intact. Nuclear energy is still very, very, very valuable solution when it comes to this whole data center issues that we're having. The reason why data centers are not being built is because they take a lot of energy. So again, that story is still intact. Don't wait till it becomes a big news that everybody's talking about. Right now, not a lot of people talking about the whole nuclear sector. So again, this is the time where you want to explore, you want to study, you want to pull up charts, you want to look up companies, you want to investigate which ones you should be, you know, thinking about long term right now before it start to become mainstream, before the first nuclear reactor that we're talking about, especially with Oklo or the other companies start going live. And he's like, oh shoot, this thing actually works. That's when, people are probably gonna be jumping in. But if you really like did your research and find out one or two stocks that's really, really good to keep an eye on long term, you be in good position. So do your research, y'all. Do your research.
And one thing I want to also add is that nuclear energy as a sustainable power source is it's not new.
Right.
I think what is new is where it's used.
Mm-hmm.
So, for example, aircraft carriers that the US builds for war, those run on nuclear energy.
Mm-hmm.
They don't need to be refueled for like 20 years. Submarines run
Yeah.
on nuclear
Nuclear. Yep.
energy
Yep.
and they don't need to be refilled.
Yep.
So people are taking those concepts and now applying it to different sectors of power hungry processes. And
Mm-hmm.
data centers, unfortunately, are a very power hungry process that runs 24/7. So, it's not the technology of where it's used in creating the reactors, like that's new. But using nuclear as a sustainable power source for long-term stability,
Yep.
that's not a new
It's not a
concept.
new thing.
So,
It's not a new thing.
there are I wouldn't say a lot, but there's a lot of names that we've kind of given that are trying to figure out what that space is going to look like when it comes
Yep.
to the AI play. And to me, I think they're really, really, really close to figuring it out.
Right. And speaking of that, I mean, you see the deal that with the nanonuclear energy NNE and super microcomputer SMCI just made, they have gone into a deal to be able to solve the energy challenge. I mean, again, we're talking about those things. I know Wale and I are not super billionaires. We don't own multi-billion company. Maybe one day we will. But it's like we're talking about those things because we see the challenges that this whole AI thing is producing, is introducing. And we're not even talking about like, the supercomputers that's gonna come that needs to be built on top of the AI that we have right now. Like, we're not talking about those just yet. We're just talking about literally building the building blocks so we can build those other super computers on top of it. This is literally the ground level that we're talking about right now. So in order for you to do that, you need to have deals like this. For example, NNE is exploring deploying those nanonucleus Chronos MMR, which is like micro modular reactor, directly at data center. to provide 24/7 carbon-free base load power. So take this whole big energy nuclear plant, condense it into something smaller, like you can put it like on an airplane or a submarine, just put it in a data center. You solve the issue now. Now you can go and build as many data centers as you want because now you can probably run that data center for another however many years, 24/7, and you solve a big, big problem. This is
Yeah.
literally the next challenge for AI. It's not about trying to prove that AI works. It's actually how do we run AI more efficiently 24/7. This is the next challenge.
Yeah. And it's crazy that go look at the move on NNE today, 27.67%
Yep.
in one day.
Yep.
And it is still off its high
It's still off his high.
of $60, which was hit in October of last year.
Yeah.
So you're talking about names or sectors that, are not trading at all-time highs that might still have a lot more upside, you know, that is probably
Yep.
one area to look. Now, I will say this, don't expect a smooth ride because
Oh no.
some of these companies, again, they're still in the development stage.
Yep.
So
Yep.
if you're thinking that, you're gonna hit the jackpot tomorrow, think again.
Yep.
But
Yep.
if these, to me, if a $1 billion revenue company like Supermicro is partnering with NNE, if Meta is partnering with Oklo and Oklo is getting contracts from, that tells me that they have looked at the technology at least to some point and said that it's sustainable,
This is worth it. Yep.
said it's worth it. So it's just a matter of execution and deployment. So that's just what you got to wait on right now. So
Yep. Yep. And you gotta think about it too. All of this is still all, what do they call them? Pre-revenue, pre-product. Like the product haven't even been made yet. Imagine if one of those companies actually came and said the product is available, it's working, it's being proven, and is going to be deployed to those data centers. I guarantee you, every single nuclear stock that we talked about, I guarantee you, those stocks are going to shoot up like crazy, and you're going to be like, "Oh Lord, I wish I was there." You know what I mean? We talk about like Aqua at 70, NNE at 29. There's a bunch of other ones that we talked about. We're talking about them like being this low. Like it's once those is proven and they have a valuable product to the market,
and then
I
you
don't know,
also
man.
you also got to understand too that uranium becomes a hot commodity product as well.
Yep.
So the uranium miners who mine uranium, you know, they're also going to be part of that ecosystem. So again, I think it's just a matter of who's going to figure it out first because
Yep.
somebody will figure it out.
Yep. Yep.
Somebody will figure it out. So
Yep.
we just got to be patient.
It's a
So,
serious, serious challenge. And
yeah. So because
hey,
all of the regulatory hurdles have been
yep.
green lighted.
Yep. So now it's just whoever can bring the product to the market faster.
Yep.
That's who's gonna win, basically.
Yeah.
So yeah, man. But again, we talk about those things, and I know every time we talk about this, while we say like it's gonna take another few years or whatever, but I feel like we've been getting proven wrong every single time, man. You know what I mean? It's like, but I hope that people are listening because honestly, this is the next challenge because I think we talked about data centers, we talked about storage, we talked about cooling technology and all these different things. But now it's like, yeah, energy is literally is the thing.
And I think if we look at like how the story has evolved, it's kind of evolved in like different pieces, right? Because first it was like
Mm-hmm. Mm-hmm.
chips and GPUs. Then it was like connectivity. Then it was like memory. And then it was like data centers. And to
Mm-hmm.
me, the icing on the cake is power.
Yep.
Because once that gets solved, then you have the ability to continue to run all of these data centers and
Mm-hmm.
to continue to meet the demand. Now, I will say this. If they build all of these data centers and demand falls off a cliff, then that creates a problem in the future. So that's just something that you have to sort of think about. Will we eventually grow into that demand at some point? It is possible,
Possible. Yeah.
but you always have to, sometimes you still have to worry about people just kind of overestimating what is needed.
Yep.
So So far, we haven't seen that. We haven't heard any. We've heard of some projects get canceled or delayed, but nothing to the point to derail the revenue numbers from a lot of these companies.
Yeah, yeah, yeah.
Unless people are cooking the books, that's a completely different story. But
Yeah. I hope not, because yeah, this
I hope
is
not either. SMCI does make me suspect sometimes because they've ran into some funny business a couple times.
yeah.
So
I don't think they ever released their earnings from like what the couple of quarters that they missed.
yeah.
That's crazy. But let's move on to some of the economic calendars, man. Tomorrow, Thursday, we have the initial jobless claims. Consumer credit also coming out tomorrow. So, but not a whole lot of economic calendar that I see. Friday also is your typical unemployment rate. Nothing big coming there. Next week, Monday, May 11th, we have existing home sales. Tuesday, we have CPI and core CPI all coming out at 8:30 in the morning. That might be good, something good to watch out for. And then we have, of course, Wednesday, we're going to have PPI. And then I'm trying to see what's going on Thursday. Same thing, initial jobless claim. So not a whole lot coming out next week, except for the core PPI and PC and PPI coming out. So that will be a good one to keep an eye on also. Wally, anything you watching out for coming out for the next week?
Nothing in particular per se, but the one caveat that I think about, and so far I have not seen any signs of being overly concerned, is the United States debt has exceeded GDP for the first time since I think it was World War II or World War I. I'm not sure which one. But basically, for every dollar the US brings in, they spend like $1.10 or $1.08, something like that. And with that type of debt, I think about whether or not the rating agencies will downgrade the US debt again at some point.
Yeah.
And I don't know how the market is going to react to that per se. Now, from what I have seen, the United States has been derated at least three times in recent memory that I can remember. I think 2011 was the one that I most recently remember. And I think that there was a few after 2020 that I remember. And there's no way that the rating is going to go up with the type of debt that they have.
Mm,
So if bonds start to move higher because of that, bond rates, because they have moved a little bit higher, but not to the point where I would be overly concerned. If they continue to move higher and stocks have to be repriced for their future cash flows, what type of disturbance does that cause for the market? That's just something that I think about from time to
yeah.
time.
Yeah.
Because the speed at which the United States is accumulating debt is disgusting.
And that's another thing that a lot of people are talking about. I think
I feel like that just gets swept under the rug.
like 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 a lot of other stuff. It just like, people just like talk over it, get buried down there. You know what I mean? So again, there's definitely a lot of distractions to
Yep.
distract people from like what's actually going on with the economy. And it literally my thing is always this, like, do people really care? I think people care when it start hitting their pockets.
Mm-hmm.
You know what I mean? Right now, everybody's, you know, might be getting by on a daily basis. I mean, I remember there's this story about an old man and his dog, right? The dog is laying down next to the old man. Every now and then the dog will scream and cry for a little bit and moan, but he won't get up. He won't do anything. So somebody, they're like, "What's wrong with your dog? Like, what's going on with it?" They're like, "He's laying on top of a nail and it's piercing his side." And they're like, "Why don't he just get up?" He's like, "Because it doesn't hurt good. It doesn't hurt bad enough for him to get up yet." And I feel like we are at that time right now with the economy. Like, it doesn't hurt bad enough. A lot of people can cry and moan and complain about it, but they can still wake up tomorrow and still be able to feed their kids, you know, pay their rent, have a nice car, be able to drive to the gas. I mean, gas is getting up there. I don't know. That might cause people to do a little bit of riot. I don't know, man. Like, I don't know. That might be the thing that hits people's pockets, but I think it's not hurting people bad enough just yet.
Yeah.
So you don't see a lot of people really complaining about what's going on. I mean, I think back when was that 2008 crash? I think that really jolted
Yes.
people. That jolted people. Like to see a line of people waiting outside the door to try to apply for a job for one job. You see 1,000 people lined up. Like for me, that was like a wake up call for a lot of people. Like, oh shoot! Like if you don't do something with your, with your money outside of your regular income, I don't know if you're going to survive. You know what I mean? So
Hmm.
again, I think we probably are approaching that time. I don't know when it's going to happen, but we'll see.
And I'll also say too, when I look at this rally, I want to leave people with bigger picture. So understand that, the United States is probably the biggest market, you know, in the world. We all know that. It's the one that we're most familiar with. But I also want you to look at bigger picture and also what happened today. So SPY was up 1.39%. EEM was up triple that.
Mm-hmm. Yep.
Also, too, on a day like this, why would silver be up 6%?
And gold.
Why would gold be up 3%? So think bigger picture. That's all I'm gonna say. I think we've talked about EEM like since last year.
Mm-hmm.
And to me, there are certain investors out there who are finding more value overseas than they are in US markets.
Absolutely. Absolutely.
So, because if US markets have outperformed international and emerging markets for the last like pretty much 20 years. And I feel that international and emerging markets may be trying to close that gap just a little bit.
Yep.
I think so. Because anytime we have big days like this, I always like, what did EEM do?
Mm-hmm.
And EEM was up almost 3.5% today. So always think bigger picture. That's why we have this show.
Always analyze everything, man. Like
Yeah.
it's you can't just look at something and be like, oh, it is what it is. Like especially
Hmm.
if you especially in the market, you're an investor, man. Like look at things with a little bit more detail than everybody
Yep.
else.
Hmm. Yep.
So
So if you just look at the performance, I mean, let me pull this up real quick. I just want to see the difference between EEM and SPY so far this year. Let me see if I can find the so EEM year to date is up 20%.
hmm.
Let's look at SPY. SPY is up 7%. QQQ is only up 12%.
Mm-hmm.
That's a pretty big gap. That's a pretty big gap. So just think about that. I think that that's something that we all need to be aware of, is that there are other parts of the market that are still just as important that might
Mm-hmm.
get overlooked. I mean, small caps are outperforming. Small caps are up 15.8%. And large cap has outperformed small cap for the last almost 20 years too,
Yeah,
if I'm not
yeah,
mistaken.
yeah.
So those areas of the market are starting to do a little bit better. Now, I will say that they carry on a little bit more risk than domestic stocks as well. So you also have to, put that caveat in there. So, but
Yep, yep.
yeah, continue to ride the wave and think until something changes. So,
Until something changes, and then the story changes, and
exactly.
the way you trade, the way you invest, got to change too.
Yep.
So
And I already told you, what are you looking for first to know when there's stress in the market? Look at bond spreads. And so
on
far,
spread.
bond spreads have been okay. So,
Yep, yep.
yeah.
Well, if you guys find value from this quick, crazy, amazing show that we always give you some good tidbits, Make sure you guys follow, share the show, send it to another investor or trader, man, trying to stay ahead of the market. But with that being said, man, Wale, any last minute advice you want to give the people?
My advice right now is if you are in the market, enjoy it. But I will also say this as well. In your 401ks or in your portfolios that have a stated asset allocation, make sure you rebalance
Mm-hmm.
because if you are in a portfolio, let's just say you are in a target, well, if you're in a target date fund, you ain't got to do it, it does it automatically for you.
Right,
But
right,
let's say you built your portfolio to be 80% stocks and 20% bonds, and now it's 90% stocks or 95% stocks and only 5% or 10% bonds. Sell some of the stocks and reinvest that into the bonds
mm-hmm.
because that's your way of doing what's called profit taking. Rebalancing is a risk adjustment measure that you should be doing, to me, at least annually, if not every 6 months. Some people do it quarterly. Don't do it quarterly if it's in a taxable account. You want to do those annually because you want your capital gains to be long-term
Yep,
capital gains.
yep,
So, keep that in mind. But if it's in an IRA, if it's in a Roth IRA, or anything like that, rebalance as much as possible, right? Just to reduce your risk exposure. Now, if you just have one fund like SPY or QQQ or BGT, then you don't have nothing to worry about. Just continue to
right,
ride the wave. But if you've
right.
got multiple funds in your plan, rebalancing, man, that is a way to reduce your risk. So I just want to throw
Yep.
that out there.
All right. With that being said, until next time, you guys stay sharp, stay informed, and stay ready always for the next move on the Wall Street. With that being said, y'all have a good night. We'll see you guys on Friday.
Take care, everyone. Have a good one.
Peace, y'all. Good night.
Peace.